Clear Media's Mining Weekly is interviewing Edward Stirk, the Director of Research of the World Platinum Investment Council, which has just published its Platinum Quarterly for the fourth quarter of 2023, along with a full 2023 year review, plus a revised 2024 forecast. Ed, it's great to chat to you once again. Demand for platinum is well up. Supply of platinum is well down. Yet the platinum price remains at a worryingly low level. Why is this?
Well, it's a good question, Martin. I think there's a couple of factors at play. Firstly, we are going through a fairly uncertain economic period. It's a high interest rate environment as well. And both of those factors are not particularly conducive to demand expectations for commodities in general, and also for investment flows into commodities, and specifically the sort of more investable commodities like platinum. But putting that to one side, I think there's a bigger factor at play here. So if we think about the end uses of platinum, approximately 40 to 45% of it goes into the exhaust treatment systems for internal combustion engine vehicles. And what we saw over 2020 through 2022 was significant underproduction of vehicles versus plan due to the impacts of COVID, and then following that, the semiconductor shortage. And if we kind of unpack the magnitude of that effect, we estimate that automakers underproduced vehicles through that period in light-duty vehicle terms by around 33 million vehicles. Now, if you translate that into platinum terms and consider that the automakers continue to take delivery of their PGM commitments under their take-or-pay offtake agreements and financial arrangements and so on, then it seems that the automakers have effectively accumulated excess inventories of around 1 million ounces of platinum. And that roughly matches up with the major deficit of 878,000 ounces that we're forecast for, we estimate we saw in 2023. And so we think what's happened was during 2023, the automakers effectively managed their new purchasing commitments to run down those excess PGM inventories. And that effectively took the heat out of the market last year. And that process is continuing to run through into the beginning of this year, but we think that it has largely now run its course.
And talking about positive net investment in platinum, what is expected to drive the ongoing positive net investment in platinum forecast in your latest Platinum Quarterly?
Principally, it's ongoing demand for physical bar and coin. So, we are expecting to see reasonably robust demand in certain geographies, particularly in North America and Europe. There are some clouds around, but overall, we are expecting positive demand in those geographies, and that's partially offset by a weaker demand outlook for Japan in particular in terms of bar and coin, and that's related to ongoing weakness of the yen, resulting in the local platinum price hitting certain thresholds at which one would expect to see disinvestment from physical bar and coin. The more challenging part of the equation really is in terms of ETFs. So as I mentioned earlier, we are in a high interest rate environment. That makes it more challenging from an investor perspective to invest in non-yielding assets, including physical commodities. And so that penalizes ETFs of those underlying assets, including platinum as well as the other precious metals. So that's the big challenge for this year. But if we look towards the second half of the year, and I'm sort of speaking perhaps a bit more in terms of my own personal opinion here, interest rate expectations are that interest rates will begin to ease in the second half of the year. And as we see that more accommodative environment come through, that is generally more supportive towards ongoing demand for commodities, and it's also more supportive in terms of the investor interest in non-yielding assets, including platinum.
Most of the platinum producers are sort of indicating that they'll be producing less. What will the result of expected platinum production reduction in both South Africa and Russia, as well as ongoing recycling decline, have?
So I think if we look at the impact so far, and we compared this Platinum Quarterly published during this month with the one that we published in November last year, in terms of mining supply, the estimate for 2024 is down by about 200,000 ounces. And that, to a large extent, reflects the impact of the announcements that have been made. What I would say is that if you look at production going forwards, there's still around 36% of global supply that could be considered to be high-cost ounces. And depending upon the impact or the success of the the restructuring plans that have been announced, it's possible we could see some risk to the downside in terms of future supply from various producers around the world. As things stand at the moment, we think that the announcements that have been made will sustain production at the levels that we're forecasting at present. But as I said, there are some potential risks to that outlook as things unfold through the course of the year.
The automotive sector is such an important sector. So could you just expand on what is driving the ongoing high demand for platinum in the automotive sector at a time when internal combustion engine production is decreasing?
It's a very good question. I mean, if we think about the overall drivetrain landscape, it seems quite possible that 2023 was the post-COVID high watermark for internal combustion engine vehicle production. So 2024, the outlook for internal combustion engine vehicles is lower than for last year. And yet we continue to see growth in demand for platinum for automotive applications. And there's really two driving forces behind that. Firstly, we still expect increased platinum for palladium substitution to occur this year. That may begin to abate or even reverse in future years, given that the price differential between platinum and palladium has more or less closed. But the bigger factor really is arguably going forwards, increased hybridization of the drivetrain. This is something we've kind of been expecting, but it seems to be happening a little bit faster than we might have otherwise have anticipated. And interestingly, it's possibly also happening at the expense of future growth in battery electric vehicles. So consumers seem to be pushing back against the kind of everyone has to electrify as rapidly as possible sort of mantra. Simply put, not all geographies and not all vehicle roles are suitable for battery electrification with current battery technologies. And there are economic aspects behind consumer reluctance as well. Just using data from the UK, battery electric vehicles on average are around 55% more expensive than the closest ICE equivalent. And during a tough economic period, that's quite a big ask to make consumers to make. So we're seeing consumers pushing back a little bit. For the first time really ever, we've seen a downgrade to battery electric vehicle production in 2023 versus initial expectations. And so looking ahead, what we're seeing is that potentially ICE hybrid vehicles and plug-in ICE hybrid vehicles are being favoured by consumers at least as the transition technology. And we're seeing some of the automakers begin to reflect that in their vehicle lineup as well. Now, the key point to make here is that for hybrid vehicles, because they're typically operating with the engine being turned on and off more frequently and therefore at a lower engine temperature, you need higher PGM loadings in the exhaust treatment system to ensure that those vehicles remain in compliance with emissions legislation. So it's roughly around 10 to 15% higher loadings per vehicle, and that is obviously supportive of automotive demand for platinum going forward, in combination with that embedded platinum for palladium substitution.
And looking at industrial demand, despite the record demand in the industrial sector last year, there's an expected decrease in industrial demand for platinum this year. Can you elaborate on the reasons behind this?
Put simply, I mean, last year, as you pointed out, in terms of industrial demand, was a record year. That was supported by a significant number of capacity additions in the glass and chemicals subsectors. So just as a reminder, most of the industrial demand is driven by the timings of when new facilities are commissioned. So when you commission a new facility, you load that facility up with the required platinum. And then on an ongoing basis, the demand is more or less just incremental to make up for any losses that have occurred during the manufacturing process. So the key thing is the timing of those capacity additions. We're expecting far fewer glass and chemicals capacity additions in 2024 than was seen last year. But on the other hand, we are seeing stronger demand coming through from other parts of the industrial spectrum, in particular from the growth in stationary fuel cells and PEM electrolyzers for platinum that goes into those hydrogen production and utilization facilities. I guess the point for 2024 ultimately is, yes, it is down on 2023, but 2023, as I said, was a record year. And actually 2024 is still the fourth strongest year in our time series for industrial demand and remains significantly elevated versus the pre-COVID industrial demand levels. So despite the challenging economic environment, we're continuing to see robust demand for platinum in industrial applications. And there's kind of a couple of ancillary reasons for that. Firstly, if you exclude jewelry and investment uses, more than 80% of platinum's end uses are in purposes where it's reducing energy requirements and reducing harmful emissions. And the need to do that doesn't go away, even during a tough economic period, particularly as we go through the global energy transition. So I think that sustains demand for platinum in and of its own. And then secondly, in terms of glass demand, we're expecting a doubling of installed wind capacity between now and 2030. And you need significant growth in the production of fiberglass in order to meet those wind turbine growth plans. So again, over the medium to longer term, we think the industrial outlook for platinum continues to remain pretty robust.
We see so many headlines about people aspiring to make the world and the planet greener and cleaner. Will the green investment case for platinum get stronger this year? And if so, why?
I think it really will. And certainly this year looks like it's going to be a bit of a transformative year. If we just focus on the other industrial demand that I mentioned earlier and the stationary applications for green hydrogen that utilize platinum as a catalyst, this year we're expecting hydrogen demand for platinum from stationary fuel cells and electrolyzers to increase by more than 120%. Now, admittedly, that's off a very small base, but for this year, what is potentially more interesting is the deployment of dollars from government subsidy schemes. So if we think about the landscape, we've got around $300 billion or slightly over $300 billion of government subsidies available for green hydrogen. That's been talked about for around a year now. But what we're seeing in 2024 is those dollars are actually being deployed. So an example would be Europe has started holding its first auctions for the production of green hydrogen and for those subsidies. And we're seeing a significant oversubscription for those auctions. Similarly, in North America, through the Inflation Reduction Act, we're seeing the government there begin to deploy dollars towards actual projects that are being developed. So I think the key point is that through the course of this year, we'll get more and more news flow around dollars actually being deployed on the ground, projects being commissioned and construction started. And as a result, that's really going to focus the investor mind on platinum and its green credentials, and thinking about how hydrogen demand for platinum is going to grow over the course of the rest of this decade and potentially become one of the most meaningful sources of end demand for platinum over the course of the next 10 years or so.
And finally, Ed, what in your view should be the biggest takeaway from the latest Platinum Quarterly?
I think it's simply that we've got these two substantial deficits in 2023 and this year, and if you add up the impact of those deficits, above ground stocks on our estimates are depleting over the course of 2023 and 2024 by almost 30%, which is a significant decline. As we've already talked about, we haven't seen the underlying fundamentals translate into price so far for the automaker inventory management reasons that I ran through. But I think that process has largely run its course. As the above ground stocks are being depleted, you'd expect that the residual above ground ounces to require higher prices to begin to drag them into the market. And so I think this year potentially could turn out to be quite an interesting year for platinum as a commodity and also as an investment.
That was Creamer Media's Mining Weekly, speaking to Edward Stirk, the Director of Research of the World Platinum Investment Council.